Welcome to Talks with Dr. Gupta and friends. Today, we're unpacking a force that now shapes not just markets, but the global economy itself, the Magnificent Seven. This phrase has dominated investing conversations. But what does it really mean? Are these companies unstoppable heroes lifting portfolios? Or does their sheer size hide a systemic risk? Let's break it down. Who are the Magnificent Seven? The group includes Apple, Microsoft, Alphabet, Google, Amazon, Meta, Nvidia, and Tesla. Together, they sit at the center of nearly every defining tech trend: cloud computing, mobile ecosystems, social platforms, electric vehicles, and now, artificial intelligence. The name itself comes from a 1960s Western, coined by a Bank of America analyst to evoke a band of market saviors riding in to protect investor returns. The scale is unprecedented. To grasp their power, consider this. The Magnificent Seven are worth more than the entire stock markets of Japan, Canada, and the UK combined. In 2023, this group rose nearly 76%, while the broader S&P 500 gained a still impressive 24%. They didn't just beat the market, they were the market. Today, these seven companies make up about 1/3 of the S&P 500's total value. That means the retirement savings of millions are deeply tied to the fortunes of just a handful of firms. Their combined valuation, around $16 trillion, exceeds the GDP of most countries on Earth. The unity is breaking. Here's the critical shift. The Magnificent Seven are no longer moving in lockstep. In late 2023, Alphabet's earnings surged 56% year-on-year. Tesla's earnings fell 40%. This isn't one trade anymore. These are very different businesses, facing very different realities. Wall Street is now asking, should we still treat them as a single group? Increasingly, the answer is no. Is this another tech bubble? Comparisons to the dot-com crash are inevitable and understandable. But there's a key difference. In 2000, many high-flying companies had no profits. Today's giants generate enormous real cash flows. Still, risk hasn't vanished. It's simply changed shape. If you own a standard S&P 500 index fund, your portfolio is far less diversified than you might think, and heavily exposed to US tech, regulation, geopolitics, and platform risk. The real dividing line, AI, what's fragmenting the group isn't hype, it's AI execution. Investors are no longer asking, who's in the Magnificent Seven? They're asking, who can actually build and monetize AI at scale? That means chips, data centers, power infrastructure, networks. By 2025, this group is expected to spend over $340 billion in a single year, much of it on the physical backbone of artificial intelligence. AI is now the kingmaker. What comes next? This is not the end of big tech dominance. It's an evolution. The old label may fade, replaced by new ones. The Fab Four, the Elite Eight, or even a Magnificent 10, adding names like Broadcom, AMD, or Palantir. The hierarchy is being redrawn in real time. The Magnificent Seven defined the last era, built on smartphones, platforms, and the cloud. But the AI era will crown new winners, and leadership is anything but permanent. So the real question isn't whether the Magnificent Seven will survive. It's this: who will define the next decade of power? That's the story investors and the world are watching now. Happy new thinking!